Hi, I'm Srivatsa and I'm the fund manager for the UTI Healthcare Fund. And I'm here to talk about the UTI Healthcare Fund and the prospects of the Indian healthcare sector in general. UTI Healthcare Fund is a fund which is dedicated to investments in the Indian healthcare sector, which comprises of both pharmaceuticals, hospitals, and diagnostic, and other emerging sectors such as medical devices. This fund has a longer term track record of more than 20 years and has outperformed the benchmark both on a 3 year and a 5 year time frame. Coming to the sector, the healthcare sector has given a negative return of around 12% in the last 6 months as on Feb end 2022 versus a minor negative return of minus 1% for the Nifty. And the key reasons for this underperformance is as follows. One is on the domestic market, while it structurally remains a very good long term growth oriented market. The domestic market has seen some level of pressures coming on the back of the impact of COVID drugs being weaned off because COVID drugs contributed a significant amount of growth in FY21, and some of the drugs have been weaned off, have kind of collapsed by as high as 85 to 90%, which has had an impact on the overall sector growth. Also, the recovery which one was expecting in some of the chronic therapies such as diabetes, heart, and as well as other therapies has not materialized on account of the fact that full normalcy is yet to be established in the Indian healthcare segment. Coming to the export side, we did see an impact on the US business, partially on account of the fact that FY21 saw a huge amount of supply chain filling up because of the epidemic, and that had an impact on the FY22 growth year to date, more so in terms of pricing pressures, which accelerated to double digit pricing pressures in the current year. This has led to some kind of earning downgrades which has happened for the generic based companies. The second part of exports, which is generally the contract development and manufacturing as well as API, also saw some level of tepid growth in the last couple of quarters because of global factors. The API segment in particular saw a huge amount of pricing pressures on account of China resuming the supplies, as well as some level of input pressures which impacted the growth for the API sector. Overall, the sector has seen some level of earning cuts in the last couple of quarters based on the factors which I talked about. And given the sharp outperformance the sector saw prior to that, has led to some level of multiple derating, which has caused this underperformance. On the hospital side, though, was a bright spot as the hospital sector recovered from the COVID and saw good growth coming in the last couple of quarters on the back of resumption of elective surgeries. The hospital sector has also seen a fair level of consolidation over the last 3 to 5 years and represents now a very good opportunity to play the longer term healthcare infrastructure in the country. Coming to the future outlook, we do believe that the Indian domestic market, which has historically grown in very good ways in over the last 10 to 15 years, is poised to grow in the coming years on the back of structural reasons such as huge underpenetration in the market, rising income levels, and also improved healthcare infrastructure, which will improve the longer term growth outlook over the next 10 to 15 years. Also, the last 3 to 5 years has been impacted by various factors such as COVID and also the GST and DMON, which impacted the 3 year and the 5 year growth. Secondly, there is also a fair expectation of good pricing increases which can happen over next year on the back of sharp jump in the inflation, and the Indian market still has a very fair share of price control drugs which where prices can increase next year, which will provide a fillip to the earnings for the domestic oriented companies. On the export side, we believe that the worst is over as far as the pricing pressure is concerned, and that should moderate quite a lot in the coming quarters. Also, the Indian companies have invested significantly in terms of development, in terms of complex injectables, biosimilars, and other high-end drugs, which should bode well for the growth over the next 3 to 5 years in the developed markets, because these are underpenetrated markets in the developed economies. We believe that both the domestic as well as the export market should continue to look up given the base that we are in, and also there should be some scope of earning upgrades which could happen over the next 1 to 2 years. Coming to the hospital sector, we believe that the hospital sector is well poised to resume its growth on account of huge underpenetration and huge underinvestment in the hospital sector. And there has been a fair level of consolidation which has happened over the last 3 to 5 years, which should bode well for the profitability of the sector. Coming to our UTI Healthcare Fund, we have representation across the major segments of the Indian healthcare ecosystem, such as domestic pharmaceutical companies, international generic companies, as well as CRAMS players. And on the hospital side, also we have a fair share of representation. We believe that the UTI Healthcare Fund represents a very good proxy to play on the growth on the Indian healthcare sector over the medium to longer run. In terms of changes, we have marginally increased our exposure to the US based generic companies as the valuations are now very, very reasonable vis-a-vis the longer term growth prospects, and also have very good presence in the domestic oriented companies. We have an equal weight in the hospital sector as we remain quite positive on the longer term prospects of the hospital sector. Thus, we have a very broad representation across the healthcare ecosystem, which will ensure that this is a good play on the on the overall growth in the Indian healthcare industry. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.